Tungsten and nickel in particular have been identified, and those are the focus for us in mining-friendly jurisdictions. So we have a development project in Spain. We've got some very exciting exploration acreage in Canada in the nickel space, also covering areas like copper, cobalt, and others, which are also exciting. But really, nickel and tungsten is our focus, and in those areas where we're familiar and already based.
Rafaella Resources owns mineral projects in Spain and Canada, including the highly prospective Santa Comba Tungsten and Tin development project in Spain. A recently released pre-feasibility study for the project included probable and proven ore reserves that firmed up its earnings potential. While critical infrastructure already is in place, the company is targeting tungsten sales from Santa Comba by the end of next year. This at a time when tungsten, which is currently sourced from a small number of countries, continues to be highly sought after by many industrial sectors. Joining me to discuss more is Rafaella Resources Managing Director, Stephen Turner. Stephen, welcome to TCN TV.
Thank you. Thank you, Lelde.
Now, Rafaella Resources issued the much anticipated pre-feasibility study for its highly prospective Santa Comba project earlier this month. Can you talk us through the key takeaways from the proven and probable ore reserves?
PFS has delivered what we're expecting, but it's given us the confidence that this is generally a very economic project. Exceptional economics is how I described it, and I think that's fair. The margins are 40%. The capital costs are low, and they've been determined on feasibility style, full feasibility style metrics, so plus 10 to 15% costings. And we've put in the recoveries that we've proven up through our metallurgical test work. So we know we have a project that's going to make good money. We know we have a project that can be expanded easily, and so it's put us in a very strong footing to move forward.
Stephen, the resource estimates in the PFS only cover near surface resources. Is there a room here to expand on the resource estimate in the PFS, and when could any resource upgrade come through?
Oh, absolutely. So we recognize that the resource is relatively modest at this point. We took on a small resource when we got this mine back in August 2019. And so our first step was to build it up to a size that we could put a PFS around, or a feasibility study around it. Now the next step is to add to that. And the good thing is that because we have all the test work done and the modeling done, we plan to go out in early 2021, do some additional drilling, and that will immediately feed into the mine plan and expand this project significantly, very quickly. This sort of drilling will be immediately accretive to the project.
So the mine life and payback estimates included in the PFS are before some potential resource upgrades. What's the current pit life estimate, and when is the project expected to be paid back? Also, when can some debt financing for the project's development costs be reasonably expected?
First of all, the resource upgrade, we'll go out, look out and drill in January, February time. So we'd expect to have an upgrade by the end of Q2 of next year. The debt discussions are already underway. We would look to have our debt in place as well by the end of Q2, perhaps towards the beginning of Q2 if possible. That would certainly give us a lot more confidence to the market in terms of moving forward, because our targeted first cash flows are the end of 2021. There's not a lot of long lead items in this. There's already an open pit there. So we can move very quickly into production, but obviously getting the financing in place is critical.
Great. Now, you mentioned moving quickly into production. The ability to get quickly into production and also sales for the Santa Comba project has been aided by many infrastructure requirements already being in place. What parts of the project's infrastructure jigsaw really are now complete, and what other pieces are still to be completed?
So we already benefit from having grid power to site. Because there's an operating quarry mine there, there's already tailings storage facilities. We'll be initially starting off by working with the quarry operator. That'll allow us to get to the near surface resources straight away. So we have offices in place, core sheds, etc. There is some old plant there that we will be removing. It's not fit for purpose, and our new process plant will be modular, easily scalable, and fairly simple to install. So these are the main items, the process plant's the main item to sort out. And one of the things we'll be doing early next year is putting deposits down to secure some of those items which you've already identified through our feasibility studies.
Now, Santa Comba's PFS also benefited from some key approvals already being in place. What were they, and what other approvals are still to be attained?
So we have a permit already for underground. So our concessions go out to 2068, and associated with those concessions are a number of permits. The underground permit's already in place, along with the environmental bond. The process plant permits in place that allows us to construct the process plant. A standard process a standard step in Spain is that once that plant is built, we have to go back and get the operating approval in place. But we do not have at this stage an open pit permit. That's fine. We have an aggregate quarry operator at site, and we're in discussions with that quarry operator to access those reserves through their permit, which is through a commercial arrangement.
As is the case for any mining project in its development stage, some uncertainties do remain. What margins for error have been built into the capital cost and metallurgical recovery assumptions included in the PFS?
Well, we actually are targeting, we've used a 70% recovery, which is what we're very confident with based on our initial test work. And that test work has involved bulk samples. So we've done extensive test work already. We are in the process of submitting an 8-ton bulk sample for further test work where we look to improve upon those recoveries, particularly focused on the fines, which is an area very common in tungsten, an issue with fines turning to slime, et cetera, and losing that ore or that mineral. So we'll be focusing on improving the recoveries going forward. Every 1% improvement in recovery leads to $1 million in NPV post-tax improvement. So it's a very effective investment for us to focus on recoveries. The capital costs plus 10-15%, we've built those up on firm quotes. Obviously adding to resource as well. There's a lot of mineralization all around us. We've only drilled a fairly small portion of that. The drilling campaign that we're going to go back in for is focusing on identified mineralization within the existing pit. So it's pretty low risk and should be, as I mentioned, immediately accretive. So there are obviously sensitivities around this. But we believe we've run a very conservative PFS at this point.
And looking closer at those economics, the PFS really assumes a $240 metric ton unit price over the life of the mine. What happens if the price increases by another $60 per unit price, which is not perhaps unreasonable, given that the supply of tungsten is expected to remain really tight over the years ahead?
So when we ran the feasibility economics, what we did is we ran a number of scenarios. We ran a $240 case because that's where the price has been over the last couple of years. So we wanted to present what we believe a very credible price deck, but that we've assumed that flat over the entire life. We have a 5-year mine life based on that, but we've also run production cases, assuming $300 per MTU price, which is the same price deck that many other feasibility studies have been run at. So all the more recent feasibility studies have been run at 300. When we run that production schedule, our mine life immediately jumps from 5 years to 6.5. We go from 6.3 million tons of ore to 8.3 million tons of ore, and our NPV basically doubles. So there's significant upside if that price picks up. We've already modeled it. So, on a like-for-like to other projects out there, our project really looks exceptional, as I've mentioned before.
Final question, Stephen. This time next year, how would you like to see the Santa Comba project positioned? And what development do you think should have taken place 12 months from now?
12 months from now, we would expect to be in commissioning. So we would have had our debt in place. We would have been drawing down. We will have secured all our main capital items, and those be installed. Our site will have been cleared. The first ore would already be mined by this point in time, and we would have already been feeding it into the plant through an early commissioning phase for first sales targeted by the end, at this time, actually, we're looking for the end of the year. So this time exactly next year, we hope to be having our first product sales.
Well, Stephen, a busy 12 months ahead. Thank you for the update and all the best for the development in that period.
That's right. Thank you. Thank you for your time.
And thank you for watching. Now, if you like what you see, please be sure to like and share the video, drop us a comment, or if you're an investor, send us an email so we can keep you in the loop with the latest ideas to empower.